Welcome to the GetRealWealth.com radio show, where wealth means a lot more than just building a second stream of income. Listen and learn how 70% of the millionaires in America used real estate to create a lifestyle that most people only dream about. A lifestyle that includes good health, family, romance, travel, charity, and all the other parts of a balanced life. Now, here is your host, real estate investor and mentor, Steve Davis.
Good afternoon and welcome to the GetRealWealth.com radio show. I'm your host, Steve Davis, where as always, we're talking about using real estate to build a second stream of income to allow you to lead a higher quality of lifestyle with less stress, less pressure, more time for the family, more time for fitness, more time for relationships, and so on. And we do this, our motivation is because 95% of Americans fail to retire by age 65. They're all, if they do retire, and a lot of people do, they go on and do it, and they're a burden on their family, the burden on the government, and that's just not the way it should be. And our belief is that it's because in our high schools and our colleges, we're not teaching capitalism. We're not teaching people how to make money. We're just teaching them how to be employees, and that just isn't working. You have to know both strategies. And so what we teach at Real Wealth Academy are those strategies. This is what the wealthy teach their kids and what the poor and middle class cannot teach their kids because they just don't know it. Now, none of it is secret. I don't want this to sound like I've got some secrets or something new. I don't. This information has been out there for literally thousands of years and extremely available for the last 100 years, since the early 1900s when Andrew Carnegie started. He actually got this guy named Napoleon Hill to write a book about it called Think and Grow Rich, to explain to the average American what it takes to be successful financially. So this is minimum of 100 years old, and some of the stuff I teach you is as old as 3,000 years old. So what we're going to talk about today is how people are passively investing in apartment complexes and the types of deals that are going on right now in what I consider an up market. I think most people agree with me. It's called a value play. And a value play is returning literally 50 to 150% in about 2 years. Now, I know that's a big range, but that's because we're in the up market. In the down market, I guess I better explain this for first-time listeners, we make more money in the down market than we do in the up market. And don't get me wrong, we do well in the up market, but man, when the crash comes, holy Toledo, real estate is on sale. And you can do incredible things for your family in the down market, which is why what are all of us praying for as real estate investors? Another down market. Whereas the speculators live in kind of a dream world where they are delusional and they kind of pretend there is no down market, that it's always going to be up. These would be people who buy stocks, mutual funds, things like that. They like to live in a delusional life that we're never going to have another crash, or we're not going to have a crash when it's time for me to retire. Well, what about the people that are retiring this month? Got an email from a gentleman who's lost hundreds of thousands of dollars in the last few months. That was his retirement money. Now, I do want to say this. I think it's going to come back very quickly once this is over with. But in his mind, he's beat to death. He's unhappy. He's discouraged. You don't want to live a delusional life. You don't want to sit there going, oh, it's going to be up market from now on. Because it's not. It's not if the stock market's going to crash, it's when. And if you happen to retire during the when, guess what? You're screwed. You're hammered. See, we don't care as real estate investors because we make money in both the up and down markets. We love the up market. We double love the down market and everything in between because we make money the entire time if you know what you're doing. So let's talk quickly about a 200 unit. I have rounded all these numbers up and down to make them simple, easy to understand numbers. But this is an actual deal that was done. And I'm not off by more than a couple $100,000. Now we're talking about a $5 million deal that ends up being worth, well, I'll save that. So a couple $100,000 is not that big a deal. I'm also not going to hack away at the closing costs. I'm just going to look at it from the sale price, the rehab. That'll be the total all in. So let's go through this. You'll understand that I rounded all the numbers because they're all whole numbers. But basically, we got this 200 plus unit apartment complex under contract for $4 million. Why so inexpensively? Because it had massive deferred maintenance, $1 million to be exact. It was 30% vacant. That's a third of the units were vacant, 60 plus units. The rest of the units were rented $50 to $100 below market rent. $50 to $100 below market rent. Now, why would somebody rent their apartment complex like that? Because when you have a piece of crap and you don't know what you're doing and you don't take care of the property, you don't take care of your tenants, how do you get people to move in? You have to lower the rent. And that's what this individual had done. So again, 30% vacant, $50 to $100 a month below rent, and $1 million worth of rehab. So for us to purchase the property, we had to pay the $4 million purchase price and bring in the $1 million for the rehab. That brings the total all in to $5 million. Our total out of pocket is going to be 30%. Now there are ways to get it lower than that, but let's go high at 30%, $1.5 million. Our net operating income, NOI, was only $400,000 a year. The bank wanted an 8% cap rate because they consider it a high-risk deal. Why do they want a high cap rate? High risk. It's 30% vacant, rents are below market, needs a massive rehab. So to them it's high risk. To us as investors, it's low risk because of all those same reasons. That gave us a value of $5 million. Action steps. Over the next 18 months, we rehabbed it. We repaired the laundromats. We raised the rents by 50 plus units, $50 plus per unit, and rented the 30 vacant units. This gave us a new NOI of $600,000. That property was now worth $7.5 million. We increased the value of that property by $2.5 million, even leaving it at an 8 cap rate. So in less than 2 years, we increased the value by $2.5 million, and here's what we did. We then went to the bank, refinanced the property, and pulled out $1.75 million. We only had 1.5 in it. That's 117% rate of return for you and your family if you'd have been in this deal. 117% in just 2 years. All right, we'll talk more with my special guest, Robert Martinez, after the break. Thanks for listening to the GetRealWealth.com radio show. Did you know that 70% of the millionaires in America used real estate as their main investment vehicle? You can and should have some real estate in your portfolio. This is Steve Davis, host of the GetRealWealth.com radio show. Starting with bad credit and no money at age 27, I began investing in real estate. By 30, I was retired. I will be explaining this at a free 2-hour introductory workshop this month. If you would like to attend, go to GetRealWealth.com. That's GetRealWealth.com. Thank you for listening. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. I'm about to introduce you to an incredible, I call him a syndicator. Some people call them leaders of deals. This is a gentleman who has done thousands upon thousands of apartment units, and his goal is to do thousands upon thousands more. You can find him online at rockstar-capital.com, rockstar-capital.com. I'm bringing him on because he's right in the middle of two of these deals. So, Robert, thanks a lot for calling in. How are you today?
Hey, Steve.
I'm sorry, are you still there?
Hey, Steve, can you hear me?
Yeah, I can hear you now. Sorry about that.
I apologize. Yeah, thanks for having me on your show. I appreciate it.
No problem. Yeah, did you hear the first segment where I raced through that 200 unit?
I heard a little bit of it, yes.
Yeah. The interesting thing is, and I'm sure you can expand on this, is I left the cap rate at 8% when we refinanced. And the reason we did that is we didn't want to affect the cash flow that much. And we didn't want to over refinance, if you will. But when you run those numbers, when you have we bought it at an 8 cap because it was high risk, it needed all that work. But when we went to refinance it, we could have gotten a 6 cap because it was no longer high risk. The rehab was complete, it was 93% occupied, the rents were all at market. At a 6 cap, that property was worth $10 million, not 7.5. Tell me a little bit about yours. When you are buying them, you're paying a higher cap rate than when you refinance them. Is that pretty standard, or are you leaving it the same? What are you doing?
I think that was the standard in a different market. I think today there is a huge demand both on the front side and on the refinance side. I mean, you can leave it at 8%, but, if you're trying to do that for underwriting, you're never going to get a deal done, right? You got to get a little bit more aggressive. Right. I think something in the 6.5 to 7 range, if you're trying to refinance, works. I know we've got a refinance project right now, a property that we have in Rosenberg, Texas, that we bought in 2016. We've had tremendous returns year after year, but, it was a little bit of a slow start in those first days as we were trying to turn the rent roll and try to get the business plan out right. But we're about to refinance that out in the next, 45 days or so, looking at a rate of 3.5%, going to pull the better part of 100% out for the investors, and the cap rates we're looking at are in the 6s. So it just depends. And in that particular deal, our debt service is actually going to go down from where it is today, roughly around $10,000. So it's such a no-brainer to pull the equity out of the deal and see a $10,000 reduction in your monthly debt service. So, for us, that's a home run. How do you say no to that? You give the investors the lion's share of their investment back. Oh, and by the way, we're going to cash flow like crazy because now I've added $10,000 every month. So on a quarterly basis, you're looking at $30,000 or $120,000 a year. That's huge.
That is huge, and I love, Robert, you just breezed by 100% return. That's, you see that all the time.
I've done those 12 times now, so it's common for us. We do those big refinances.
That's amazing, but I want the listeners to not miss what Robert said, 100% rate of return. And the other thing is he's done this so many times that it's become commonplace, as if it's not a big deal. But Robert, that is an incredible deal that you're doing. It's amazing what you're doing for your investors.
Well, if you look at it, when you're thinking about an extra $10,000 a month, that's $120 a year. That's almost the amount that we distribute back on a quarterly basis. We distribute closer to about $150 or so, to $170. So you're looking at almost getting another half to 3/4 of a distribution back per year, just by doing the refinance. So, what a wonderful way. We avoided all of the pitfalls of the stock market. How many trillions were lost in the last 2 weeks with what's going on today. And at the same time, we're continuing to lease. Our committees are continuing to grow. Oh, and by the way, we're going to pull a bunch of money out and in the same process, these future cash flow.
And the listeners need to understand that we still own the property. A lot of times when I talk about refinancing, people get confused and they go, oh, okay, so you got your money back. We still have our original money in the deal, plus some. Our 1.5 has turned into almost, $5.25 million, depending on the scenario. The scenario I gave you is our 1.5 went up in value to $5.25 million worth of equity. So it's even better than you think because we're not pulling every dime out because we want the thing to cash flow and so on. So you're working on 2 deals right now, right?
Yeah, yes, absolutely. Before you move on, so I just want to say a quick thing. That is a team effort. That is not just me. I mean, you're giving me a bunch of nicknames. I am a wartime general. I'm the one that, that has to make those decisions and get us ready for right now for whatever crisis we're going through. But you got to have an army. You got to have a great army that's going to go up against the next guy. So I've got 110 people right now within our company, 20 in our corporate team that are all battling, the situation that's going on in the market right now. And I just want to make sure that, because I know they're listening, to tell them thank you. I know they're all putting themselves in a situation where we're continuing to keep the properties moving and leasing and touring and just keep moving forward for the greater good. So I just want to tell them thank you for all their extra effort, right? But that refinance, again, that's not me. That's the team. You got to have the right property manager in the chair. He's got to have the right leasing agent, the right maintenance team. You got to have the right district manager, regional manager, a VP of operations, COO, VP of marketing, underwriting, finance, asset management. I mean, it is a team effort. That's why we're able to generate those kind of returns. There's a lot of eyes besides mine paying attention to those deals.
Yeah, that's incredible. 110 people. When you first started investing and were thinking about apartments, did you ever think that you'd reach this point? Was that a goal, or is this something that just happened organically as you were moving forward? I'm curious.
It was very organic. It was certainly not a goal. I thought I was going to get involved in rent houses, and I bypassed that and got into multifamily when I realized, that you can get larger chunks of your money working. And then we just got, I was very methodical in how I did this. I bought one deal a year for a long time. And that core team there, and some of them are still with me today, right? We sat there. We learned the business together. More importantly, we got involved in 2011. That was the height of the recession. I mean, my very first deal was $15,500 a door. Nobody wanted it. Been foreclosed twice in the previous 10 years. And that's the kind of property we bought. And that was, that was a lesson in itself. Just every day going through new kinds of situation and crisis. So the crisis we're in today is just another crisis. We survived all kinds of crises. It just, you have to go through the process. But what happened was, over time we realized, wow, we're pretty good at this. And I've got a lot of horses that need to run, and they're able to do more than one deal a year. And as we grew together, we grew organically. We started winning a lot of awards. We started having financial success for our investors. And next thing you know, I'm just getting emailed left and right from my investors wanting to re-up. And I've got $100 million worth of investor equity that's come to me, but because of my core team, not just because of me. I mean, yeah, it takes somebody to sit in that chair, but and lead the group. But you got to have that team working with you, all pulling in the same direction. And so before long, it was just momentum just picked up. I never thought I'd be at 4,000 units. I didn't think that. I didn't know we'd have 21 assets. But I also didn't know I'd have the kind of team with me. I guess I was looking at it early on from a one-man show kind of thing, and then it turned into a two-man show. And before long, we're brain sharing with 20 on the corporate team. I mean, some companies don't even have 20 in their entire company. I got 20 just on my corporate team. So it's like when you realize that you have the capabilities, your mind shifts a little bit. You're like, you know what? We can do more. We can be different. We can all work together and help each other out to grow financially. I mean, I'm really excited. Several of my team are actually invested in my deals with me. So it's not about just Robert. It's the whole team growing, and so that's what makes it fun.
Yeah, I find that too. The other thing you're bringing up is that life, and especially business, but I think life in general is a team sport, but especially business is a team sport. And there's so many people out there with the me, myself, and I mentality that they don't trust people. They think everybody's out to get them, and they keep to themselves, and they don't kind of stagnate. They do stagnate. But if they can get past those fears and those beliefs that good people are not out there, that everybody's out for themselves. I mean, I have a team, and I'm not talking about payroll. I'm talking about my agents, my wholesalers, my attorneys, the CPAs. It's 100 people that helped me achieve what I've achieved. And I bet if you really think about it, you start adding in all your contractors, your attorneys, your CPAs, it's not just 110. It's over 200. What do you think?
For sure. You got a professional team. We've got a fantastic attorney. I mean, we were negotiating a deal this morning with him, and he's been with us for 5 years. We have other partners now. For example, I know you're talking about NOI. We've got professional tax people that help us protest our taxes. We have a variety. Our flood insurance guy that helps $2,000 on this in flood insurance on this one deal. I mean, there's a mountain of people that for sure are all working together to help you. They help us. kind of thing. And it's been a fantastic ride.
So you're working on 2 new purchases as well. So you're doing a refinance and 2 new purchases at the same time?
So we're doing a refinance and we're doing a purchase. We did have a second one that we were going to look at, but with the uncertainty of the economic climate, a new market, some distance between us, I think we're better off focusing on what we have to keep our portfolio where it needs to be first, and finish out the refinance, which is most important to get money back into the hands of my investors, and then focus on the purchase that we're already really near the closing stage on. So it's one of those things where we chose the better good of the whole than to try to go after something new right now.
Absolutely, that makes total sense. So with your present portfolio, you're planning on. I know you've got that goal of 10,000 units. I've seen that, I think, on Facebook or LinkedIn or somewhere. What is your deadline for that? I know there'll be some changes, but what is your goal deadline for that?
Yeah, I want to rephrase that. It's not a goal of 10,000. It is the journey to 10,000. I want to document our story. I want it to go forward, and I want to show what it's like on the way up from 3,000 to 4,000 to 5,000.
Okay, we got to go to break. We'll be back with Robert Martinez after the break here on the GetRealWealth.com radio show. If you've got a question for Robert, feel free to call in at 281-558-KSEV. You're listening to AM 700, the voice of Texas. Thanks for listening. 70% of the millionaires in America used real estate as their main investment vehicle. Listen to the GetRealWealth.com radio show to find out how you can do it too. Monday through Friday at 2 p.m. right here on AM 700 KSEV, the voice of Texas. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. We're on the line with Robert Martinez, who is one of the top real estate investors in the United States. He's a syndicator. He buys apartment complexes. People partner with him to help him purchase those apartment complexes. He's up at 4,000 units, and he's headed towards 10,000 units. And Robert, I guess my question is, when you were starting out, what was it that drove you? I mean, because all of a sudden you went from where you were at to here, and I know it's been a long journey, but what got you motivated? I'd love to hear your story.
Yeah, I think very early on, I'm a sales guy. There's probably a lot of sales guys you in the radio that are sitting in their car, or they're at the office, and I had to learn to kill what I was going to eat at night, and it was really important that I developed that sales skill, and I got really good at it. And what happened was my employer came and monkeyed with my commission plan, and I made less as I sold more. And after that happening a couple, 3 times, I realized that wasn't the path I wanted to take. That wasn't the path that was going to get me where I needed to go, and I decided I needed to find something else, and I looked at other avenues, and I found real estate. I found a real estate club. I found some mentoring. I learned. I made the most of the opportunity, and I was inspired to recapture back the lost commissions and sales bonuses that I was missing out on.
Well, that's because you own. You're the owner of your company now, and the other thing, this has been, for me, a motivating factor, is I now refuse to ever mess with my employees, because it's so painful when you're working your butt off, you win national sales contests, you increase your sales, and even after all that, they still come in and mess with you and cut your pay.
Absolutely. It's demoralizing, and I agree. I share the same sentiment. I don't like to monkey with people's commission plans. In fact, I've never done that in all the time that we've owned Rockstar Capital. If anything, I add more and more opportunities to make numbers and bonuses and commissions. I offer special incentives all the time. So I don't want to do that. I mean, it's very simple. It's black and white. You perform or you don't. That's how I wanted to be judged when I was in the workforce, and that's how I judge everybody at the company. Everybody has an ROI. What is your ROI?
And your family, let's talk a little bit about your family. You've got a couple of kids. Tell me a little bit about them. What are they doing?
I've got a 14-year-old named Connor. I got an 11-year-old named Brian, and they are little pit bulls on the soccer field. I mean, they are fierce and vicious, and I love them like that. I'm your prototypical soccer dad. You'll know who my kids are because I'll be yelling their names, and I'll be the loudest one there on the sideline. And, I'm very happy that I discovered real estate back in the day that allows me to take into practices. I don't miss a game. It's very important to me to be there. And when I go, if there's overnight travel or away games or tournaments, I'm there. And it's very, very fortunate. And so I'm understanding of people too within my company that if they need to take time off. I mean, I've got people in upper management who take time off. They go do things that are important for them and their family. I have no fear that they're not putting in their time. I know they're working at night if they take a few hours off during the day. I'm very open to that. Family comes first, and I think with that, you got to create a family atmosphere that lets them know that what's important to them is important to you. And I think if you do that, people will stay with you for a long time, and that's where real success in business comes from consistent staff, from a consistent company that's moving forward in the same direction, not starting over and stopping and having to recruit people or rehire people.
There's a Simon Sinek meme, I think it's Simon Sinek, where it says people don't leave companies, they leave bad managers. Mm-hmm. And my turnover, I'm very proud that my turnover has been extremely low, because I always felt like if somebody that I hired, that's a promise to train them as best you can. And if you can't, it's a little bit of a failure on your part as well as theirs. And you seem to be taking that attitude. Do you spend a lot of time training your people?
Absolutely. I mean, we have a full-time training team, but more importantly, we have an open-door policy. I mean, I have people that text me, call me all the time, and it's everything. And then when you teach that to the people below you, you find out what's important to them, and you make it important to you. They do the same thing as they grow in the company, and they make it important to them. They make that important to them. What's important to somebody else, and with that, you create an amazing culture. I'm very proud that in 2020 we were voted best. One of the country's best multifamily places to work. Most recently I was the HBJ Most Admired CEO, and they only gave that out to a handful of CEOs in Houston. I mean, I was up there on the stage with all kinds of other major companies, Fortune 500 companies. Here we are with Rockstar Capital, and I'm up there on that stage, and I'm up there because of my team. I mean, they put me up there on that stage, and so it starts from the top. And if you're not willing to work hard for them, if you're not willing to give in, if you're not willing to try to help them grow, why should they do it for you? It's just a job. And you need them to have true business success and long stand. It's got to be more than a job. Like right now, we're going through this situation that's going on nationally, and I got people putting in extra hours, and I'm not asking them to do it. They're doing it because they know it's required. They could easily shut it off. They're not shutting it off. They're keeping it going. I get text messages all night long from different people, making sure that we're staying on top. And you can't buy that. They have to want to do it.
I totally agree. That makes so much sense. You can't pay for it, but they do it because it's part of the mission, and they're mission driven.
For sure. Okay. And then it makes me want to bend over backwards and do whatever I can for them and their family. If you go into the forest holding hands, there's a better chance of you coming out on the other side together. If you go in by yourself, you run the risk of getting lost.
Or eaten.
Or eaten.
No doubt. Okay, so tell me a little bit about I guess I should go ahead and give, I'm sure there's a million questions. How can I get with Robert Martinez, and I would like to be in his next deal. If you want to find out about that, come to our free introductory workshop, which is going to be about 2 weeks from now, because we have to do that 14-day, I think it is, before you're allowed to do events again. But you can go to getrealwealth.com, and in the upper right-hand corner, we have a free workshop. And in that workshop, I'll be explaining what Robert Martinez will be doing for Real Wealth Academy, because he's going to be doing many, many deals with us if we're lucky. And if you want to find out about that, go to getrealwealth.com, go to the upper right-hand corner, and click that free workshop and come to that. Again, it's going to be about 2 weeks because of the COVID situation, but go ahead and get yourself in line to get that information. So, Robert, what do you look for as far as properties now? Are you doing any yield plays, or are you primarily looking for value plays? What are you doing in the marketplace?
Yeah, I don't think there's such thing as a yield play, because yield play means that you're already maxing out. You think you're just going to coupon clip, and that doesn't really exist, especially in today's market like this. That doesn't exist. You got to be looking for value add plays, and you can have a little hybrid. You can buy some net cash flows day one, but the thing you're going to walk into like 6, 8, 10% returns day one. No one's going to sell that to you. They're going to max out and throw it to you at a 6 cap, and you'll be walking into 3 or 4%. So your show's about NOI creation. You got to look for deals that are value add. You got to find opportunities. You got to be able to see through the weeds there. Okay, how are they operating it? How am I going to do it differently? You focus on the income. You focus on the expenses. Every dollar that you add to the NOI is worth $17 of valuation. So if you keep that in mind, every time you save something or every time you grow something by $1, you've added $17 of valuation. And there's a variety of things I'd love to go into with you right now if there's time, but if not, I'm sure we'll be able to explain it when I'm up there on stage with you trying to help other people grow.
Yeah, that's right. I forgot to tell people. Also, we are not taking reservations for the grand opening yet. We had to move it back into the end of April, but he's going to be at our grand opening as well, and I will keep you posted on that. And Robert, I'm going to be reaching out to you probably in the next 24 hours. I would like to do a 1-hour class with you where you come to the office, sit, and we film it and send it out to all the members now while they're sitting on their rear ends doing nothing, waiting for this COVID to go away. Are you open to that?
I am. You just let me know what time and place, and I'll make sure I'm there along with some of my team. Yeah,
that'd be excellent. Okay, what else would you like to share with the listener, Robert?
I think you need to get involved in real estate, and I'm not talking office buildings. I'm talking multifamily apartments. I think that has been the best performer in the market the last 20 years. I think that we I didn't lose $6 trillion of valuation in my businesses. My business continued to grow forward. Every time we leased a new apartment and it was a +1 at the end of the day, and somebody moved in, I mean, we went up anywhere from $45,000 to $75,000 of value just with that one apartment. Every time we rework a new service contract, every time we get our property taxes protested and they come down, every time we get our insurance renewal and it comes down, you add a valuation to the property. That doesn't happen in the stock market. It's very it's like gambling out there, isn't it? Right? Because you never know what's going to change. You never know what's going to happen. You're exposed to something global, And hey, we're going to have our issues here too, right? So you got to make sure you find the right guy to invest with. It's something I like to say. There's a lot of peacetime generals out there right now that are putting deals together, but they've never been through a crisis. They've never had to go through that. We were born in 2011, this company, and we've been through crisis after crisis. We are wartime generals ready to play, and those are some of the things I'm happy to teach the students that join your club, on how we're surviving today and what you can do to grow your NOI.
Yeah, that's phenomenal. All right, Robert, I sure appreciate you coming on the show today. Thank you so much, and I'll be in touch within 24 hours.
Thanks, Steve. I look forward to it.
All right, take care. All right, this is the GetRealWealth.com radio show. We'll be back after the break here on AM 700 KSEV, the voice of Texas. Thank you. Did you know that 95% of Americans fail to retire by age 65 and 36% are dead? The good news is that here at the GetRealWealth.com radio show, we know what the other 5% are doing. 70% of them own real estate. We are a mentoring group for new and experienced real estate investors. We will show you how to build a second stream of income that will allow you to retire at any age. I will be explaining this at a free 2-hour introductory workshop this month. If you would like to attend, please go to GetRealWealth.com. That's GetRealWealth.com. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. My special guest, Robert Martinez, will be teaching a class with me for our members. So if you're a member, be on the lookout for an email probably 2 to 3 weeks from now, where I'm going to do probably a 1-hour, 45-minute to 1-hour interview with him and answer some questions, some hard questions about property management of these big apartment complexes. So you can see what it takes to actually run one of these and why you want somebody like him on your team if you're going to invest in one, because everybody and their brother right now is suddenly becoming a syndicator. There's multiple people, big names, that are putting together real estate investment trusts, REITs or REITs, and these guys are not like Robert Martinez. They're taking out so many fees. It's unbelievable. I looked at one REIT or real estate investment trust. I could not believe all the fees. There was a fee for putting the deal together. There was a fee for raising the capital. There was a fee for financing the deal. There was a fee. I mean, it was insane. By the time it was all said and done, it was no better than a stock. And actually, I believe REITs are no better than stocks. They're just a different form of gambling. And they hide behind real estate. It's like, oh, this is real estate, it's different. No, you're just a company buying real estate. You're making all the money, and your stockholders, the people who invest in the REIT, are getting the low rates of return that you get in the stock market. Unbelievable. So you're looking for real people, not these big giant companies, because in my opinion it's no better than the stock market. And Robert is one of those people that puts together deals and makes them available for the members of Real Wealth Academy. Okay, let's start some emails now. Of course, the first email is a COVID question. Has there been any discussion here yet about governments potentially ceasing the ability to collect rent for a certain time frame during this COVID pandemic? The only thing that I've heard is that they're stopping evictions. It's my understanding that all evictions are supposed to stop. Now, I can tell you this right now. I wasn't going to evict anybody during this situation anyway. You know, there's multiple routes for people to get their rent. I just want to make sure, example, tenant comes to me and goes, I can't go to work. They closed, I'm a bartender, or you're in some other job that's been shut down. I'm not evicting those people, but I am going to give them a deadline, which is 20 to 30 days, to come up with a plan to make their payment. They can go to the city, they can go to churches or other charitable organizations to get assistance with their rent. And they have to do that and show it to me on paper. Otherwise, when the COVID situation is over and evictions resume, there's going to be evictions. You know, they've got to make an honest effort to get that rent paid. Now, again, am I going to evict somebody this month? Absolutely not. It's not even a question. The government doesn't have to shut that down. There's going to be certain people that have that problem. But I'll tell you this, I'm going to verify it. If someone comes to me and says, I can't work, I'm going to find out where they work and they've got to prove that that's what's really going on. Because there's going to be a certain number of people who are going to try to scam you. You know, they're working full time and they're coming to, because of COVID, I haven't been able to work. Don't let that happen. Inspect, don't expect, verify everything. He goes on to say, any ideas on how to combat that? Oh no, there's nothing else in this email. So that's what's going on right now. I do not suggest you evict people because, one, it's the wrong thing to do, and two, I think you're going to get blasted because I'm fairly sure that in Harris County they've stopped evictions. You're not even going to be able to do it if you do file. Okay, next question, email question. By the way, the phone lines are open, 281-558-5738, 281-558-KSEV. This next email is how to bill a tenant for damaged property. This is actually easy, but you have to document everything. And Kristen, I hope that you documented when they moved in. You have a move-in checklist. They signed that. You took photos of everything, and you've got that filed on your computer. So you have before and after photos. It is difficult to go to a judge and show damage. They're always going to say, do you have before pictures? If you don't, it makes it very difficult for the judge to decide. Part of your job as an investor is to make the judge's job easy. Take those before pictures, get that move-in checklist signed so that you have it. The only exception I know to this rule is I didn't have photos, but I had a receipt and the contract where my contractor had completely rehabbed the place. And I showed him, look, I just spent $20,000 or whatever it was on this house to make it perfect before they moved in. Now look. And then I show the pictures, I show the move-in checklist, and he was able to make a decision off of that, and of course I won. So make sure that you document everything from the move-in forward. Where people drop the ball is they don't take those photos before they move in, and then when something does go wrong, it's difficult for a judge to side with you because he doesn't know what it looked like when you moved in. So make sure you've got that checklist and make sure that you take photos before they move in. Okay, phone lines are open, 281-558-5738, 281-558-5738, or you can email me. It's asksteve@getrealwealth.com, asksteve@getrealwealth.com. Okay, this is another bathtub surround email, and I read it, and there's all these little ideas that people have. And what I mean by that is saving money. Remember how I poke fun at people who cut coupons? I poke fun at people who think they're going to save their way to retirement. It's the same thing inside rent property. If you think you're going to scrimp and save your way to success inside rent property, you're wrong. There are certain things that you must do at a high quality level. Flooring is one of them, bathrooms are another one, and kitchens are another one. So that's pretty much the entire house, because everything else is what? Paint and trim. So you've got to do it right. Do not do those little cheap surrounds because they look like a cheap hotel. And they crack. I have not had luck with them. I inherited a bunch. I replaced most of them the minute I saw them. But in my early days, I didn't know better. So my advice on the bathtub surround is do not do a bathtub surround. Tear out the tile and put tile back in. Do it right. And then it'll be there for years. It'll be there longer than you're going to own that piece of property. Let's put it that way. Okay, let's go to the phone lines now and go to Spring. Let's talk to George. George, thanks a lot for calling in. How are you today?
Hey, you there?
Yeah, I'm here.
Hi, Steve. Thanks for taking my call. I've got, just trying to lay it out quickly for you. I'm in a rent house and have been for 20 years. I had a great deal with the woman who owned it. She's recently passed. Her son has taken over the property. He's offered me the option to either buy it outright, owner finance, or continue to lease it. And now it should be said that, the home's not been remodeled in the 20 years that I've lived there. Air conditioning's old. A lot of things, the windows, a lot of things, floors, everything needs to be replaced and updated. It's a very modest home. It's probably worth $150 as is, might be worth $200 tops. Remodeled, needs about $70,000 put into it, in my opinion. Just kind of wanted to get you to weigh in on, what do you think about this kind of a deal? Do you think it's...
Did you say $70,000 rehab?
That's what I'm thinking, man, yeah.
Yeah. See, then I don't like your first number, which was, I think it's worth $150 now. No, it's worth $200 minus $70 minus some profit for you. In other words, why would you go in and pay $130 for it, put $70 in it, and then end up with a $200,000 home that you've got $200,000 in it? I would be more interested in that home at around 100, and then you put 70 in it, then you got 170 in it, you're picking up $30,000 equity, and your monthly payment's going to be less than what you're paying for rent unless you had some super deal. Feel free to email me because we're at the end of the show and we can talk more, George. Sorry about that. All right, thanks everybody for listening. This is the GetRealWealth.com radio show. I'm your host, Steve Davis. You're listening to AM 700 KSEV, the voice of Texas.
The GetRealWealth.com radio show. Please remember that this show is for entertainment purposes only and should not be construed as legal, tax, or investing advice. Always get a professional opinion before making any investment decision. To find out about the mentoring and consulting at Real Wealth Academy, visit GetRealWealth.com and attend one of our free introductory workshops on real estate investing. That's GetRealWealth.com. Thanks for listening and have a great rest of your day.